And good morning and welcome to Money Matters Live. We are officially live. My name is Nev, and today is Saturday, July 5th, 2020. And we're doing something a little bit different. As you can see, my background is different, and that's because I decided to take you into what I call my summer office to do the show today. So today we have a very, very important show, and we're going to be talking a bit more about cryptocurrencies. We talked about it yesterday, but we ran out of time. I mean, we spent over an hour talking about stuff, but we didn't talk about everything I wanted to talk about today. And we have received a second quarter of 2020 report when it comes to cryptocurrencies. So we're going to take a look at that. We're also going to look into, the ownership of cryptocurrencies as it relies on the United Kingdom. It's a very cool and interesting report, and I know it's covering one country per se, but the cool part about it is that it sort of drives our ability to understand what's going on inside the market and how people are behaving. And then finally, we're going to talk a bit more about Kyber network, KNC, and see what it is like, because you've heard of me talk about Kyber network yesterday, and we talked about how it has a potential to explode, and how it's a good concept within the altcoin industry, so to speak. But many people don't understand what it is. So I figure we can do a little bit of an education session today. I hope that that's okay with you, and to uncover what is Kyber Network and kind of give you a bit of framework when you hear about different projects, how to go about researching them and deciding whether it's a good project or just not so good. In the past, we used to focus on the ICO, and some fancy name would come up and you would jump in and everybody would sort of buy in, and you made money and people were doing all kinds of crazy stuff when it came to crypto. Of course, that all crashed because it was not sustainable. There were no fundamentals behind it. And so today I want to talk about, we're going to talk about some technical analysis when it comes to Bitcoin, just to kind of understand maybe the prices. And then we're going to also look at fundamental analysis of how do you do those things. So that's really what the goal is today. And as I mentioned, I am recording this outside, so you might on occasion hear some sort of another firework popping, which I don't know why they would do fireworks early in the morning, but hey, to each their own, or an occasional motorcycle, because it is summer and people like to ride those things in the summer. Anyways, let's do this. And good morning. Welcome, welcome, welcome. I want to welcome everybody who is watching live on onedealaway.com, as well as everybody watching on YouTube, because I do understand that 7 a.m. Eastern Time doesn't work for everybody. So if you are on YouTube, do me a favor, hit the subscribe button right now, hit the like button as well, and of course, the bell to get notified every day when the new episode goes live. And it does go live every single morning. So let's get started. We don't have time to waste, so let's get started. Let's take a look at what's going on in the top 10, so to speak. And you can see it's a predominantly down market, with the exception of crypto.com coin, CRO, which has a slight, small sort of increase. As you can see, it's kind of downish, not a whole lot. Not much is happening. I mean, it's a very, very boring market right now. Let's take a look at the price, or the change in the 24-hour period. And as you can see, we do have some rather exciting news and things that have changed. VeChain is up 36% almost. Compound is back on up 14%. Loopring, IOS, Nulls, Icon, Bytum, Synthetics Network, all of those puppies are up and up nicely. The biggest losers, Flexicoin, Ren. Oh no, Ren is down a little bit. Ox, Augur, Celsius, Elrond, Ave, Coin Shares, Cardano Energy. So BAT is down, and so you can see that there's some The biggest loser, obviously, Flexicoin. But when you look at some of these coins, I don't know that I would necessarily be dumping it. And as we're going to talk about today, we're going to learn how to evaluate some of these projects to understand whether something like rent, for example, is something that you should dump and not participate in, or if it's being offered at a discount. So that is what is going to help us fundamental and technical analysis. And of course, we're going to be covering some of those things today. So first thing first, there was a report. Let me see if I can make this a bit bigger so it's easier for you to see. There was a report that was sort of issued by CoinGecko. It's a quarterly, second quarter report of 2020, and it really kind of covers a bit of a cryptocurrency market overview. So we're going to use that to understand what's been happening. And as you can see on the first slide that they have provided, we are seeing that the overall cryptocurrency market cap grew by 44.5%. You can see it, this big green thing right here. But the overall trading volume has decreased, and you can see that right over here. So that's an interesting piece because typically volume and market cap go up. And market cap basically means how much money has entered the market. And we'll see that over the last 3 months, which is the second quarter, we have actually gone up 44.5%. Meanwhile, the volume has dropped. So that means there's not much of a trading going on, but there is quite a bit of money entering the market. So that's an interesting piece. And we are expecting that most people are either doing derivative trading, meaning they're not necessarily on the chain, but they're just sort of trading on the derivatives within the traditional markets, or maybe DeFi, or just holding. Or hodling, I guess would be the correct term when it comes to cryptos. So you can kind of see what's going on when it comes to market dominance. And of course, Bitcoin has risen just a little bit, 0.3%, still top by far, far, far. This is the orange piece right over here. That's the Bitcoin. And then the very next one is Ethereum. Ethereum actually has gone up. I want to say that's 1.6%. So that's an interesting piece to see that Ethereum is definitely growing in the adoption and the sort of people wanting to be part of it. And rightfully so, because it is the number one place where decentralized apps, also known as dApps, are being built on. And we're going to learn a bit more about all of that stuff when we talk about Kyber network and kind of how it works. Of course, then we have Tether or USDT. That has gone up a little bit. That's a stable coin, meaning it is 1-for-1 exchange for a dollar and is being used a lot, again, in decentralized finance, in the payment solutions, together with DAI, for example, which is a decentralized version of the whole thing. Tether is much more centralized version. So if you want centralized Tether, if you want decentralized DAI. So that's kind of the two sort of competing, so to speak, stable coins. Now we have the Bitcoin price versus the trading volume. And you can see that the price has kind of recovered nicely since the drop in March, but it's kind of going flattish. And it's a very interesting piece. We've talked about it. The volume has dropped down, and we're going to learn a bit more about this whole concept in a few moments. When we talk a little bit about some technical analysis for Bitcoin and what can we expect when it comes to that particular crypto asset. We noticed that the hash rate has dropped 27%, my gosh, not 72, 27%, basically meaning that it's a bit slower to kind of process some of the stuff. And the interesting piece when reading about this stuff as to like why this might have happened has to do with the fact that we've had a halving, which basically reduces the amount of money that a miner can earn by half. And with the price kind of being stable-ish, a lot of the smaller miners had to shut down. Older machines had to switch to a different network. As you understand that the Bitcoin is actually using SHA-256 to mine on, and there's some other coins like Bitcoin Cash and Bitcoin SV that are using the same thing. So some of those miners that are using older machines to mine have switched from Bitcoin to Bitcoin Cash or SV. And of course, we've also seen another reason is that there are in largest mining pools are located in China, and a lot of those miners have switched over to Sichuan, which is expecting a rain season, meaning there's going to be more water, more electric power, potentially lower energy, and so they have to shut down and move their rigs over to the cheaper area. And this is kind of cool, personally speaking, because you get to learn so much more about kind of how the business even works, how it runs, and kind of how different operations are working. And you learn even more about the countries and regions and kind of how people behave. So I personally found that this was really cool and interesting component as well. Now we have the Bitcoin price versus USDT circulating supply, and we are seeing that in first half of 2020 that the USDT circulation increased by over 100%. They have actually gone up and printed, so to speak, all this money, and it has been increasing. And even though the tether, USDT is tether, only grew 0.3% in market dominance, they are now up by almost 1.2 billion dollars in market cap, with second quarter of 2020, which is a 14% increase in the past 3 months. So they've been printed like crazy. And interesting piece is that a lot of people are starting to use Tether now to do the exchanges with the Bitcoin, because Tether is one Tether equals $1 US. So it's that stable coin. So instead of using the USD, they use USDT, which you can see right up here. And so that's kind of what they use to evaluate and trade. So you can definitely get this report if you want. You can read the full-blown thing. This is just the highlights from the report. All right, switching topics just for a moment, and then we're going to jump into Bitcoin technical analysis. And this one kind of makes me laugh a little bit, so I wanted to share with you because I like to laugh. I like to enjoy things. As you can see, most of the time I am very excited and very cheery and going, and I like to laugh. So, this one is very, very funny, and it has to do with Peter Schiff, who's saying gold is more likely to hit a new all-time high in 2020 compared to Bitcoin. For somebody that doesn't like Bitcoin, boy, he tracks the thing a whole lot. I know for me, when I don't like something, I don't track it, I don't trade it, I don't buy it, I don't sell it, I don't do much of anything with it. And it's so interesting to me. See, I told you there's going to be a noise. My apologies, but we're trying something new. So hopefully you can hear still well. But it's so interesting to me that somebody, who is, who doesn't like Bitcoin, who says it's a scam, that actually buys it, watches it, talks about it, monitors it. So it's a very interesting component. And for me personally, I don't know that there is a competition of gold versus Bitcoin. I think both are important and both are paying, have a sort of a role to play in the new economy and the new financial system that is being created before our eyes, whether we know about it or not. So that's just kind of my take on it. I don't know how you feel about it. Let me know in the chat. And of course, at the end of the show, we go in and do Q&A and chat and converse. Or if you're watching this on YouTube, again, put it in the comments. I'm curious to know how you feel about the whole thing. And again, if you're watching this on YouTube, do me a favor, hit the like button, hit the subscribe and the bell to get notified when we go live, which is going to be tomorrow and the day after that and the day after that and the day after that. So anyways, let's change the conversation. So here we go. We're going to do a little bit of fundamental analysis and kind of have a bit of an understanding how people do this stuff, because my ultimate goal is to provide solid education to you here on Money Matters, because I think it's important. It's the number one way for us all to survive all of these crazy market valuations and exchanges and all these different things that are happening in the world when it comes to our money. So as you know, I'm a firm believer in education. And so I want to spread the goods, so to speak, of what I know and understand. So here we go, Bitcoin price analysis. Now, Bitcoin price was trading mostly inside a $200 range between 9,000 and 9,200 for the past week, 10 days, something like that. And we've also seen a very low volatility, which is super uncommon for a risk asset like Bitcoin. Stocks are also risk assets. So anything that kind of has volatility is seen as a risky asset. Now, Bitcoin is trading inside a symmetrical triangle pattern. We're going to look at the pattern in a moment. And it's testing the same lower angle of the triangle again. So it's kind of going, so triangle pattern basically is like this or like this. I don't know. I don't know how the camera is going to do it, but basically creates a triangle, and the underlying asset kind of trades inside that triangle, having higher prices on the wide angle of the whole thing, or wide end of the whole thing, and then lower prices as it kind of continues. And I'm going to actually scroll down so you can see it. So you can clearly see this line, and you can see this sort of trading inside the triangle, and you can see that it gets smaller and smaller. This is a very exciting and very bullish signal. Of course, it could be bearish signal as well, because once it kind of hits this point over here where the 2 points of the triangle touch, then it has one of two options, and when it does, it shoots, and it shoots either up or down. We don't know exactly where it's going to go, but that's just kind of how it all works. And I think I've talked about that in the previous videos. So it's testing the same lower price of the downside of the triangle, and we're witnessing a declining pattern of volume candles. They're seeing the least amount of volume. So volume is dropping, prices are sort of stabling off, so to speak. And by the way, when we talk about the prices stabling, I do believe at some point when Bitcoin becomes this sort of mainstreamish, it's still not very much mainstream, even though it's large within the crypto community. It's not mainstream in the global financial community and the global currency community. But I think once we get that, I think the price of Bitcoin is going to become super stable, super boring, even more boring than now. And we've seen kind of what the prices are doing, and we've seen what's going on with Bitcoin. Let me share this. I mean, it's barely moving, y'all. It's barely moving. Look at this. We're gonna go in, and I'm gonna show you. It's super boring. Hold on, it's loading. Of course, we're looking at all of it, but let's just look at 1 month. And yeah, it's kind of going down, but there's not much happening. It's such a small movement. It's basically going sideways, and that's something that I think in the future we're going to experience. Now, is that future going to be 5 years from now, 10 years from now, 20 years from now? I got nothing. I have no clue, but that's kind of how I see it happening. So price levels to watch in the short term. Any breakout would likely point out the next short-term direction of the price of Bitcoin. First level of support lies around 90.50, followed by 9,000. We are at where's the price, we're at 90.26, right? So we are within this range. Further below lies 88.30, 8600, and then 8,400. That's in case it goes down, when it kind of has this a bit more I don't want to call it parabolic movement, but a bit more volatile movement. uh, excuse me. First level of resistance on the upside is 9200, followed by 94, and then followed by 96. And you can kind of see what's going on here. So you can see that we've had this, like, gone up, and now we have this triangle pattern, and it's slowing down. And we could go potentially up and kind of go down. So he's done a lot of analysis here. And then this is the 1 day chart. So this is a 4 hour, and this is a 1 day chart, which sort of zooms out just a little bit to kind of take a look at what's going on. And as you can see, it's trading on the upper side of the spectrum, and the volume is basically nothing. I mean, that basically tells me there's not a whole lot of excitement within this particular crypto asset at the moment. Now, that can change. It always changes. And, we always see these sort of gaps and changes within the volume. And that doesn't mean that people are not going into the crypto space or that they're not trading. It just means that they're not necessarily trading Bitcoin. They're likely going into DeFi projects, into potentially futures, derivatives, and that kind of stuff, which futures is a derivative, but other derivatives maybe. All right. So this was an interesting piece. I told you we're going to look at sort of what's going on in the UK as far as the citizens who potentially own and understand cryptocurrencies. And this was a kind of interesting piece. Now, the UK Financial Conduct Authority, FCA, so that's what the FCA stands for, outlined that they have increased in popularity and ownership since 2018. Up to 2.6 million people on the island holding digital assets. Yeah, there's a bit of a noise. There's a truck coming by. I don't know that I'm going to be doing the outdoor thing very often because of noise. So my apologies if you're having a hard time hearing me. Like I said, I like working out here, so I come out here to work all the time in spring, summer, fall. Uh, but I don't know that I'm going to be doing a recording ever again outside because it's not fair to you and the noise. So we tried something new, it doesn't work. We won't do it again. Okay, so the UK watchdog advice on crypto. UK's popular and local authorities have become much more knowledgeable on digital assets since the first paper in 2018. 2 years ago, the watchdog and the Bank of England even contemplating a potential ban on the sale of retail consumers. As a proof, the UK's advancement in digital currencies became the 2020 budget. The government announced plans to consult on bringing certain cryptocurrencies into the scope of financial promotions regulation and initiate negotiation for a broader regulatory approach. This is actually very interesting because when they're starting to look into this stuff and looking at bringing the regulation, that basically means that they are looking for the thing to stay. This is very key. Many people look at regulation and think, oh no, this is bad news. For me, I look at this and say, oh wow, this is good news. Because if they're looking to regulate it, they're looking to keep it. That is a key component to think and consider if you're a hodler, which I think many people might be. 79% of digital asset owners are males, while 69% are over the age of 35. This is very interesting and kind of sad. But again, we also know that men tend to be a bit more on the risk-taking side, so it is normal to see them adopt something that is not as adoptable because ladies typically, not always, typically end up being a bit more conservative when it comes to trying something new. But it is interesting that we do have vast majority of people that are in it, they're over 35, because a lot of times they'll say, this is for the young audience. And now we're seeing, well, I don't know, not so much, because we're seeing people 35 and over in predominant places. Now, this is UK only, of course, but I think it's a snapshot, and 2.6 million people is nothing to sneeze at, personally speaking. We estimate that 3.86% of the general population currently holds cryptocurrencies, half hold under 260 British pound worth. So a lot of people are holding, but they're not holding a lot of money, right, on average. Now, of course, you have the whales, which is people that hold a whole lot of money. And then you have the general population, which have just a little bit kind of testing the waters. And I think that that's a good and prudent thing to do when trying something new. You don't want to jump in with everything you got when you're testing something new and seeing if it works, right? Uh, 92% correctly identified the cryptocurrency definition, right? So education is going up. 89% understood the lack of regulatory protection, and 50% answered that they're expecting to make fast profits. So most people are in this puppy for a long run, and they understand the market. That's what basically that means. 92% said that they hadn't borrowed funds to purchase cryptocurrencies, which is a deep contrast when in 2017, 2018, most people were borrowing mass amount of money to jump in thinking that all this crazy stuff. So people are being much smarter about getting into cryptocurrencies, much more educated and following sort of solid investment components, saying, I'm in this puppy for a long term. Only 20% of the population has never heard of cryptocurrencies compared to 58% in 2019. This is huge, y'all. This piece is right here is huge because more people are hearing about it, more people are being educated about it, and they're starting to kind of explore the whole piece. So very small number of people are saying, I don't know, I've never heard of this thing. Nearly half of the participants complained that there is plenty of misleading media outlets and fake news circling the space. And I absolutely agree. And this is why we're doing the show. This is why Money Matters covers cryptocurrency projects, provides information, provides solid education. And of course, if you are looking to get into the cryptocurrencies, don't quite understand it, understand maybe a little bit, but not quite, then make sure you come and check out onedealaway.com. Go into Crypto 101. It's a free introductory course of how cryptocurrencies work, what different projects are, how to protect yourself, how it all works, how to evaluate it, and above all, it's all absolutely free. So anyways, I welcome you if you want to learn. It won't cost you a dime to go and check it out. And you get a very solid course that provides answers to a bunch of different things that you don't have to go around from different areas to be able to learn. So we learn everything about what it is, how it works, different wallets, how to do some technical analysis, how to do some fundamental analysis, and just have an understanding of kind of how different things work. And I think it's a very, very cool course. We've received a lot of accolades for the course, people learning a ton about cryptocurrency projects, which gives people confidence. When you hear about something, but you don't quite understand it, it's very scary to go in and invest and potentially lose money because you're putting money into something you don't understand. So my big goal is for you to be able to learn, to understand, so that you have confidence whether you want to go in or not. So you're not relying on news of somebody like Peter Schiff saying this is crap, it doesn't really work. You can actually make that decision for yourself and not necessarily just listen to somebody and their own opinion. You get to form your own opinion with education, which is why Crypto 101 course exists on onedealaway.com, and is also another reason why we do Money Matters Live every single morning so that we get to learn about stuff. Now, we're going to change topics just slightly, and we're going to learn a whole lot more about Kyber network. And we're going to spend a lot of time learning what it is, how it works, who's on the team, what is the token, kind of what does it all do? Because we hear about these cryptocurrency projects, about tokens, about different stuff. You've heard me talk about KNC having a potential to be maybe a good altcoin to get into, to hodl, to invest in, to stake, all these different things. But what does all of that mean, right? Like, it's one thing to hear about it, and you were like, I don't know. I don't want to jump into something that I don't completely understand, and that's a good thing to do. But, here it is. Let's go and learn more about it. So what is Kyber Network? Kyber Network is basically a protocol. It's a computer program. It's a protocol that enables automated, decentralized, instant, and low-fee exchanges on Ethereum's based assets. These assets include Ethereum itself as well as ERC20 tokens. Vast majority of the decentralized finance is built on top of Ethereum. Ethereum is basically this large network. It's a large protocol that has smart contracts that you can actually invoke and program to allow you to create your own project to solve some of the problems that we're experiencing. Kyber Network solves a problem that when I want to go from one token that is built on Ethereum to another one, I don't have as many options of how do I exchange it. So we're going to learn more about what Kyber Network solves. And this is kind of how you evaluate stuff. So one of the things that it provides is decentralized means of exchange, meaning there's no entity behind it. There's no person behind it that controls what happens. Computer does it all on its own based off of the protocol written within the programming, within the computer program itself. It connects various tokens ecosystems to enable free flow of assets to decentralized webs. So they give a really cool example. Okay, and we're going to read the example. I didn't highlight it, but I think it's important to be able to understand on an intellectual level and theoretical level how this all works, which is also practical because it does work in practice. Let's say you own some KNC, which is Kyber Network's token, but want to purchase a hardware wallet from a company that only accepts DAI, which is a stable coin that mirrors the value of US dollar. And it's a decentralized stable coin, unlike Tether that we just talked about a few minutes ago. If they're part of a Kyber network, it's not a problem. So say I want to buy a wallet, for example, but they accept DAI. I only have KNC, right? So in the past, I would actually have to go in and trade my KNC on some sort of exchange, collect the DAI, send the DAI over to the seller to be able to get my wallet. Cool? Now, Kyber Network does something very interesting. I can actually use KNC, okay? I can pay in KNC, okay? And just say, yes, pay for this. Kyber Network basically automatically, using the best possible prices on the network, converts the KNC into the DAI and pays the merchant, right? So it simplifies the process for me. So instead of me having to go in, let's take it into the physical world. Say that I have a US dollar, right? And I go and travel to Europe. And in Europe, I want to buy, say, this mug, right? I want to buy this mug, but in Europe, they don't accept US dollars. They accept euro. So what would I have to do? I would have to go take my dollar, walk over to the bank or exchange office, exchange it for euro, go back to the merchant, give them the euro so that I can buy this mug. Now, imagine, right? Kyber, that's kind of how it works, just digitally. Now, imagine that I have this wallet on a phone, which I didn't bring with me out here because I'm working, and also having fun. It's kind of nice to work and have fun at the same time, y'all. I must say. So imagine that I have the stuff on a right on a credit card, for example, right? And that credit card, I go into the store and I say, I really like this mug. I want to buy it. I go in, I pull out my credit card, I swipe the credit card, and right there on the machine, they receive euros. I get charged in US dollars, and we're both equal. So that's kind of the credit card solved that problem through the system, right? That's kind of what Kyber Network does with digital stuff. It simplifies things. It makes it so much faster and easier, right, for us to transact with each other. Now, Kyber exchanges happen faster and cheaper than many centralized exchanges. And we're going to talk more about that. It has token reserves that contain various assets, the takers. So I, as a user of Kyber Network, when I need to use the money for whatever thing, like buying the mug, for example, I am a taker, right? The maker is the person that is going and putting money in, putting liquidity in. We're going to talk more about this stuff. Don't get too discouraged. And if you don't know some of these things, the best practice in studying is when you hear some of these things and you don't understand it, like ERC20 token. If you don't know what that is, write it down somewhere and then look it up. When you hear about the providing liquidity, what does that mean? Write it down, look it up. This is the best way to learn. And so I think it's important for you to do that stuff. Don't let words that you don't understand pass you by and sort of give up. Write it down and research it. That's how you become smarter and can kind of keep up with all of the changes. So Kyber has token reserves that contain various assets, and there are different asset classes that kind of exist within it. Okay. So what they do is when you, a taker, initiate payment in KNC, right, to buy that mug or the hardware wallet, and the company only takes DAI, your payment calls Kyber smart contracts to start a token swap. The smart contracts draws from token reserves to exchange the KNC for DAI, which is then given to the hard wallet company, right? So automatically changes, just like that credit card when I swipe, automatically kind of banks do their own thing and exchange it. The merchant gets paid. I get my money deducted. I don't get paid. Same thing kind of happens here with the KNC network. Okay, you can use it to buy any Ethereum-based ecosystem that connects to Kyber network. And for example, you cannot just buy KNC, but every other Ethereum token because it all lives within Ethereum. This is why Ethereum is so important and why I'm so bullish on ETH as a cryptocurrency to hold, because every smart contract that runs uses ETH. It basically charges you in ETH to be able to run it. So you have to have it. That's why I love the darn thing. I don't know that I love it, but I believe in it. Uh, Now, here's some benefits of Kyber that you might like. And again, my sincere apologies, y'all, for the noise. The truck is there. I can't move them. So hopefully you can still hear me and the sound is not as horrible. I kind of keep hoping and praying that they just disappear slowly but surely, but they don't seem to be doing that. So anyways, my apologies. All Kyber network transactions are recorded on the public Ethereum blockchain, so you can verify the exchange rates and reserves and everything else. There's no partially executed order. So sometimes when your order is too big and the centralized exchange, for example, cannot fulfill it, you only get portion of your exchange. So if I want to buy like 10 of something, but they only have five, I only get five, which can be frustrating, right? It's easy integration with dApps, which are decentralized applications. We talked about that. Wallets and other crypto entities. So it's very easy for them to plug into Kyber's liquidity and enhance their offerings. So Kyber white paper, so you can learn more about the technical stuff, and all of that is basically within the white papers. So whenever a new project within a crypto space is offered, they offer a white paper to give you kind of this big picture thinking of what they're all about and what they do. So Kyber Network Crystal is the network's token. So KNC doesn't stand for Kyber Network Coin. It stands for Kyber Network Crystal. That's what they call it. So just go with it, okay? You can call your coins whatever you want. That's the cool piece about this space. To be part of the network, reserve contributors pay a fee for every transaction. Reserve contributors do have an incentive. They make money off the spread between the buying and selling. So whenever you have a buy sell, you always have a difference, right? And that difference is the spread. This is how the reserve contributors basically make money. Okay, Kyber automatically matches the takers, meaning the users of the token exchanges, with the best rates. So what that does, it creates the competition amongst the reserve contributors to keep the spread reasonable. So let's break this down just a little bit so that we all understand it. So if I go in and I want to do the exchange for whatever reason, right? You can have many different rates. And so if I am a reserve contributor, meaning I have some money and I'm saying, here, you can use my money for your transactions, but I'm going to accept a fee and I'm going to charge you $1. But say Bob is also in the same network on the same exchange doing the same stuff, saying you can also use my stuff, but I'm charging 50 cents. So of course you're going to go and say, I'm going to go with Bob because he's charging 50 cents, Nev, you are charging $1. So basically what it does, Kyber Network automatically, instead of, going back to my example of traveling to Europe, if I wanted to exchange my dollars, there are exchange offices all over the place in Europe. And instead of walking from one exchange to another, trying to find the best possible rate that I can exchange and get most euros for my dollars and pay the smallest fees, imagine having this smart device on your phone that basically says, I want to exchange the rate. And it says the best rate exchange in Paris, for example, is located on this street, Nev. How amazing is that? That's what Kyber Network basically does. It finds the cheapest fees and sends. That's kind of what it uses to exchange it. So to keep it competitive, we all have to keep within the same rates. 30% of transaction fees that reserves contributor pay for Kyber Network transactions go to integrations like apps, wallets, exchanges, and businesses. Every transaction they facilitate, they earn the KNC. So 30% of all the fees. So out of that dollar, 30 cents goes into pay. 70% is burned, meaning it goes to this random unusable wallet that nobody ever has access to anything. It just sort of disappears. Now, why are they doing that? Well, we're going to explain, and we're going to explain right here. By making part of the Kyber transaction fees forever useless with every transaction, total supply of KNC goes down with every transaction. Following basic supply and demand, if supply goes down, but the demand stays same or increases, economics says prices should go up. This is a very cool and interesting piece, right? So it basically creates a higher value for KNC every single time transaction is being used. Kyber is planning to increase KNC's utility even further by implementing staking, which is a popular form of crypto passive income. So right now, token mechanisms like burning encourage people to hodl, right? But hodlers and network integrations like dApps benefit from buying and portion of all transaction fee. Reserve contributors need more for incentive. Reserve contributors only earning KNC on spreads, it's kind of hard to say I'm going to keep on buying. However, if you can go in, get incentivized that the makers are going to be receive more by staking, meaning you get paid. It's sort of like a savings account if you really think about it. You put money in, it's in a savings account, it's actually earning some interest on it. And another piece that also does with a lot of the staking is that it gives you an ability that you can vote for certain things. So it gives you governance within these decentralized applications and processes and exchanges and so on. When you stake, oftentimes, not always, but oftentimes, you receive an ability to vote. So you get to make a decision of how we're going to do things. Are we going to, what are the fees going to be? What are the tokens, right? Like what tokens we want to add on and so on. So you basically get paid to be part of the network and you get voting power, which is very, very cool and very, very important. So Catalyst is the sort of the thing that they're developing will make Kyber more decentralized since stakeholders don't require a large minimum balance to participate. Waiving the minimum balance removes a barrier to entry to reserve contributors. So that means that you and I, regardless of how much money we have, we don't have to have this like $50,000 to be part of the whole thing and to be able to make money and to be able to stake and make decisions and stuff. Anybody can go in and join. DApp builders will also have an option to set their own spread for transaction instead of the currently predetermined 30% of Kyber's and 0.25% of transaction fee. So they get to change stuff and be able to make more money. This upgrade could not only lead to sharp increase in demand for KNC and also create this. It's already one of the top exchange protocols, so it's going to share. There's going to be a large demand, and with the supply going down, the prices are well poised to go up. This is that sort of large thinking fundamental analysis of kind of how things could potentially work. Reserve contributors will also receive part of the network transaction fee based on how many trades and trading volume they facilitate. So makers are incentivized to grow and trade quantity and trading volumes. Takers get greater liquidity, meaning it's easier for you to buy and sell, and more available assets and more trading opportunities. So all of those things are very, very bullish signs for KNC. Now, of course, they have a very strong team. They're located in Singapore, and Vitalik Buterin, the founder of Ethereum himself, is one of the advisors. Key thing to consider when evaluating projects: who's on the team, what do they know, who are the advisors, what have they done. Kyber network continue to grow. More and more partners and dApps are joining. So we have new wallets, we have NFT projects, which is non it's basically the non-fungible tokens. You can't exchange them, so they are typically gaming tokens. Exchange protocols like Uniswap and Oasis, decentralized finance projects, DeFi apps, dApps, and so on. And what they're doing is they're making it very easy for them to plug into it. They're creating developer-friendly resources. They're creating all of these different, speaking engagements, education engagements, hackathons, and all kinds of cool things. They're having massive increase in trading volume, and you can see it that it spiked up, and daily trading volume has gone from nearly zero to millions of dollars, sometimes even tens of millions per day. That is huge. Another metric to look at is Oh, never doing the outdoor ever again. Another metric to look at how many KNCs have been burned by the network, and you can see that the supply has been increasing rapidly. It took 15 months to burn 1 million, only 2.5 months to burn 2 million, only 3 months to burn 3 million, and it keeps going up. That is very important because it means supply is fastly shrinking while the demand for the coin, for the network is going up. That is the reason why people are talking about KNC and why it has a huge potential to be a huge, huge, huge project and a huge token to hold onto within the alt space. There are currently 211 million, blah, 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 total of KNC as of writing, and the supply is fixed. That is key component to remember. So as it keeps on burning, the supply will keep on going down, not up. Now, given that the trading volume is rising drastically, people are using Kyber more and more. I think you can see where this is all going. Another piece that they're also working on is the project called Waterloo. And Waterloo is basically looking to connect EOS with Ethereum. And so what they're doing right now is they're connecting the two ecosystems. They're working on that, so they don't have that quite yet, but that's what they're working on. And that's huge because right now, to be able to transfer tokens from the EOS network to the Ethereum network, you have to jump to BTC. You have to go into the Bitcoin. But what they're trying to do is say, you know what? Can we forego this? Can we just sort of connect each other? And if you don't know much about EOS, it's sort of another project similar, not exactly the same, but similar to Ethereum that allows for individuals to build different decentralized applications or even centralized applications that uses different smart contracts. So it's similar in some regards to Ethereum, but it uses different programming languages, different protocols. It runs a little bit differently, and so if you want to look into it, I highly recommend that you do that because it is another player within the crypto ecosystem. Now, Kyber Network Wallet. If you want to store your KNC, you have a few options. Kyber Swap, which is the Kyber's using facing app, lets you swap tokens, has an app for Android and iOS. Kyber's parent company moved from Malta to British Virgin Islands, so they had to resubmit their iOS app to the App Store and waiting for Apple's approval. One of the things that you may not know that I didn't know until recently is that when you build apps, when you do it on Android, it's very free and you can put in just about anything out there. Nobody's watching or monitoring. That's cool part about it because it gives you more freedom. The bad part about it is that you might have some apps that might not be all that good, as well as potentially malware. When we look at Apple basically says you have to submit it to them. You have to follow the rules. They review everything, which could be a bit sort of like, man, really? But on the other hand, as an app user, you know that it has been seen and approved by Apple before you see it in the Apple Store. So it makes it a bit safer for the end users. There you go. In case you didn't know that, now you do. If you prefer not to store your valuable KNC on your phone, you can store it KNC on any wallet with ERC20 support, such as Exodus, MyEther, MetaMask, and so on. However, I am going to say that you probably want to put, especially if you have a lot of money, a lot of crypto, you don't want to use the web browser wallets. You want to use those for purchases, for quick exchanges, and that kind of stuff. So smaller amounts, you don't want to store your wealth there for the reasons that we covered yesterday's show because it's easy to get into and easy to steal. So you want to use hardware wallet like Trezor or like Ledger, which are the two largest integrations of the hardware wallet. They are the longest standing. There's other ones, but these are the longest standing, and they have a very, very good reputation within the industry. So overall, as you can see, Kyber Network has a lot of great potential, a lot of things that can be beneficial to users, and that is why you're seeing many people talk about KNC and being potentially good project for people to own, hodl, and basically get into. So this is how you do analysis, fundamental analysis of whether a certain project does or does not make sense. I hope this was helpful to you, that you have learned something. If you're watching this live, we're going to go into the Q&A in just a moment. If you're watching this on YouTube, please, again, do me a favor, hit the like button, hit the subscribe, and the bell. Thank you for watching. We'll see you tomorrow. Until then, stay forever money blessed. And do remember, you are only one deal away.